Welcome to 1031 University. I'm Paul Holloway. Today we are going to discuss what is like-kind under 1031 of the tax code and certain items that are not considered to be like-kind in completing your 1031 real estate exchange. So a lot of you have probably been a part of a 1031 exchange and you'll hear the term that you have to buy like-kind property. So does that mean that if you sell a 3-bedroom, 2-bath rental property that has pink curtains and blue carpet, that you have to purchase a 3-bed, 2-bath with pink curtains and blue carpet? You can if you wish. But no, it doesn't necessarily mean that you have to do that. The definition of like-kind under 1031 of the tax code is other real property, so the key being real for real if you're doing a real estate exchange, that is held for investment purposes and or trade or business. So if your goal is to, if you're selling a rental property, a residential rental, you could buy a condominium, you could buy vacant land, you could buy an office building to run a business out of. It's a rather wide scope of properties that work. So basically what you're doing is moving it from one type of real property interest to another that is held by trade, business, or for investment purposes, and it is considered to be like-kind. Some other less known things that might qualify as like-kind under 1031 would be mineral interests, so like water rights or oil rights. If it is deemed from a state law standpoint to be a real property interest, it is possible to sell a rental, for example, and buy water rights or oil rights if you want to diversify your investment a little bit. We have some people doing that. We have people going into fractional ownership interests, meaning they sell as an individual, but they're going to be a tenant in common owner or a fractional owner with other co-investors on a much larger non-management intensive property, like say a Walgreens store. So they may buy as a Delaware statutory trust and potentially own a small fractional interest of a large commercial building, and that can work as like-kind as well. It is possible to buy a leasehold interest, so you might sell fee real estate, but what if you want to buy a leasehold interest to complete your 1031 exchange? Ultimately, as long as that leasehold interest is 30 plus years running, that leasehold interest is deemed to be a real property interest. So if it's a 10-year lease on a building with no optional extensions, that more than likely is not like-kind. But if it is a 20-year lease with 2 optional extensions for an additional 20, upwards of 60 years, that would qualify as like-kind under 1031 of the code. So that gives you some ideas of what is considered to be like-kind under 1031. But what are some things that are not like-kind under 1031 of the code? Let me give you a few examples. So I might sell a property as Paul Holloway, starting the exchange, and let's just say it's a rental. But what if I want to, so I sell a rental like this. What if I want to buy into another rental, but it's going to be owned by ABC LLC, a partnership, of which I will be one of the 3 members of this partnership. That is not considered to be like-kind property because a partnership interest is deemed to be a personal property interest in this investment. The partnership itself owns real estate, but myself individually, a member of a partnership, would own a personal property interest, therefore it is not like-kind. A principal residence, if I sell a rental, and if I want to buy a principal residence to live in, that as well will not qualify as like-kind under 1031. Principal residence is an entirely different section of the tax code, that being 121 of the tax code. We'll have a piece on that later, but a residence is not like-kind to investment property. Property outside of the United States does not qualify as like-kind either. So if I sell this property in Colorado, but I want to buy a rental property in, say, Mexico or Canada, that as well will not qualify as like kind under 1031. You have to keep the dollars within the U.S. borders and buy other investment property. Stocks and bonds, albeit a form of investment, but stocks and bonds are not real property. That is personal property. So that is another example of what is not like kind under 1031. A final example of what is not like kind, a REIT, also referred to as real estate investment trust. So you might have a REIT that goes out there and buys multiple large commercial buildings that obviously on the surface look like good like-kind property because it's an investment property, it's a commercial building, should be good, right? But what you have to ask yourself is at the end of the day, this REIT, what are you actually receiving? If you are not getting a deeded real property interest in that REIT, that is not like-kind. If they are giving you shares of stock, that is, like I mentioned earlier, stocks and bonds are not considered to be like kind. So just tried to give you some ideas of what works under 1031 as like kind, as well as what does not qualify as like kind. So this has been 1031 University. For more educational tips on the 1031 process, please visit accruit.com. If you like this tip, please subscribe to our YouTube channel and be on the lookout for future classes. Thank you so much.